Well, the Asian markets, they're trading mixed ahead of that crucial Federal Reserve meeting later tonight. The Nikkei, that had opened up in the red. That's sitting with a cut of around 0.2%. That's more got to do with regard to what's happened with the yen, because the yen has shown strength. It was sitting at around the 111.7 odd mark. Now that's shown some strength, and that's why we're seeing some mild profit booking on that particular developed market. That's down 0.2%. But otherwise, the Kospi was trading in the red. That's recovered. The last time I checked, it had moved into the green. And not just that, the other couple of markets as well. The Straits, that had opened up with a mild green tick, while the Taiwanese index is a bit in the red. So 2 in the red, 2 in the green to kickstart trade. A mixed start is what we're getting from the Asian markets. But the SGX Nifty is indicating maybe a 20 to 25 point bump up just to kickstart trade.
Okay, so it might be mixed in the Asian scenario, but if you look at the US markets, they all ended in the green. The US stocks closed modestly higher ahead of the Federal Reserve meeting that begins later tonight. Now, the S&P 500 closed almost 0.5% higher. Nasdaq was supported by gains in Amazon as well as Apple shares, and the Dow Jones posted 4-day winning streak, advancing 65 points at close. CNBC's Aditi Roy gets us a wrap of all that transpired on Wall Street yesterday.
Stocks notched some modest gains on Monday. The Dow up 65 points, the Nasdaq adding 26 ahead of today's start of a 2-day policy meeting by the Federal Reserve, with a decision on interest rates coming tomorrow, the first day of spring, but no hike is expected. The White House releases the president's economic report today, defending his economic policies, the new tax law, and proposed cuts to social services. Just one economic report today, factory orders for January. In earnings, we hear from Chinese smartphone maker Xiaomi, discount shoemaker DSW, and the arts and crafts chain Michaels, all ahead of the opening bell. FedEx is the big name after the markets close. The Game Developers Conference starts today in San Francisco. Google is expected to release its new video game streaming service. And The Economist publishes its annual list of the world's most and least expensive cities to live in. Last year, Singapore was the most expensive city to live in, and Damascus, Syria was the cheapest.
Well, the 2-day FOMC meet starts tonight, and it is widely expected that the Federal Reserve will hold the rate steady. Here is some opinion from experts on what to expect from the central bank.
I actually don't necessarily anticipate that the Fed will cut rates, but I do think they should cut rates. And I think the reason for that is that whereas my baseline outlook is quite positive, I think we'll see growth in 2019, albeit slow growth. But the downside risks are out there, and when you're so close to the effective lower bound, you really want to keep that economy as healthy as possible. And you don't have that many medicines to treat the patient when it gets sick. You want to keep the patient as well as he or she can possibly be. And that means, I think right now would mean an interest rate cut.
The consumers or the workers are getting a little bit more. They can actually spend more and the economy can grow faster. But the real wrinkle here, Dominic, is that when you look at the relationship between wages and overall inflation, that has actually weakened over the last decade. So when you see wages running a little hotter, and they're not too hot, because after all, the Federal Reserve wants average hourly earnings to grow between 3 and 4%, and we're at 3.4%. So they're not above that target, but a little hotter is actually good. And then you couple that with the fact that that relationship is weakened, there is no other way to go than to let the economy run a little hotter.
Well, turning our attention to the European markets, they ended mostly higher, with gains led by banking sector. This after Deutsche Bank and Commerzbank announced that they had entered merger discussions. So both those two German banks, they did well, but surprise, surprise, if you're looking at the three frontliners, the German index was a relative underperformer. Both the FTSE and the CAC ended in the green, while the German index ended with a bit of a negative bias.
Okay, then let's just focus to the currency space, because remember, we have been seeing a lot of movement in the rupee with the strength coming in, but the dollar index has eased ahead of the Federal Reserve meeting. The Japanese yen gains versus the USD, while the euro trades flat. The dollar index should come up for you on the screen. It was yesterday hovering between that 96 to 97 level. Let's see how the day pans out for the rupee as well as the dollar index today.
Well, in the world of commodities and crude oil prices rise, with Brent hovering around 2019 highest levels, supported by prospect of extended OPEC-led oil supply curbs and also signs of inventory declines in U.S. crude stockpiles.
Okay, on that note, we will slip into a short break. Come back, we'll tell you all the cues and news you need to know for trade this morning. Stay tuned for that.